Hi everyone, welcome back to the channel Yong. Most of us are aware that Singapore dollar have been getting stronger recently. It has appreciated against several major currencies in the past 1 year, such as to Japanese yen. Singapore dollar to JPY has rose to an all-time high of 99 yen compared to only 81 yen 1 year ago, which was more than 20% appreciation. Singapore dollar to Malaysia ringgit, which is also at record high, 1 SGD is now equal to 3 ringgit 21 cent, around 3% appreciation. If you look at the historical currency exchange rate chart for the past 1 year, Singapore dollar are getting stronger compared against euro and pound, except compared to the USD. A country currency rate can be affected by many factors, including the country's central bank action, country political and economic situation. It is difficult to predict the direction in the future, but in the past, it is said that the Singapore dollar are going up because of the tightening policy by the central bank, MAS, as they follow the US central bank to raise interest rate. What does this mean to foreigners? Is it good or is it bad? So there are various perspectives to look into this. For foreign investors, if you are an existing investor who already own assets in this country, Singapore, it is probably good as you can see your portfolio value are increasing over time due to the strengthening of the Singapore dollars. It is considered as a gain from foreign exchange translation if you are valuing your portfolio in your home country currency, such as to India rupee, Indonesia rupiah, euro or even pound. If you are a foreign new investors who are looking into investing in this country, you may see that this is a bit more expensive to invest in. But looking at the currency stability, it is actually proof that Singapore has been doing a good job, and the currency Singapore dollars is considered the safest currency in Asia. If you are a multi-millionaire in Asia, you probably want to spread your portfolio in Singapore because of the stability of currency. Indeed, SingDollar is ranked as one of the top 10 most stable currencies in the world in 2022. For foreigners who are working in Singapore, your earnings in SingDollar are likely to be translated into higher value depending on your home currency. Not surprisingly, close to 43% of Singapore population are immigrants from all over the world, such as from Malaysia, China, India, Indonesia, Philippines, Thailand, and many more. At the same time, Singapore is seen to be attractive as to attract foreign talents to work in this tiny island. Guess what? This is the reason why many Malaysians are working in Singapore, including myself, because the currency rate is triple. For fresh graduate, imagine comparing 2,800 ringgit or in SingDollar $900 versus the pay of $2,800, which is more attractive. The cost of living is also increasing in Singapore, especially the current hot rental market that has been rising on an average of 20 to 40%, really putting expats under pressure to rent a place to stay. Question: if you are working in your home country now or somewhere else, would you be considering moving into this expensive city because you could gain from the foreign exchange? For foreign tourists who would like to visit Singapore, unfortunately, this country is becoming more expensive to travel. However, it really depends on your traveling style. There are expensive luxury hotels such as the Marina Bay Sands Hotel that cost at least $600 per night, or there are affordable budget hotels that cost around $50 per night. Singapore is still considered as an expensive destination compared to all other Southeast Asia countries. However, it is worth to pay a visit to see how this country has transformed well into a global hub of innovation. I have yet to get bored to see the Marina Bay Sands building, the garden by the bay, the waterfall at Jewel Changi Airport, and definitely expecting more projects coming in place soon. Theoretically, a country currency rate, if it is too high, it could affect the export demand. This doesn't really apply in Singapore context because Singapore does not focus on exporting commodities. In fact, strong Sing dollar helps to absorb some inflation effect from the higher imported raw material prices. For business owners and individual residents, a stronger currency helps to preserve purchasing power. There is always two sides of the coin. Strong currency is good for import companies but bad for export companies, good for local residents, making traveling abroad more affordable, but could be bad for tourists who would like to visit Singapore. It is difficult to speculate on the exchange rate, which we also do not encourage betting on it. This video is purely for sharing, so do comment below on your views about the currency appreciation and the impact on your lifestyle. Again, thank you for watching this. Consider subscribing to our channel and give this video a thumbs up for YouTube algorithm. Thank you and see you again in the next one.